Hello and welcome to another episode of the Expert CPG Commerce podcast. My name is Ryan Flynn, the founder and CEO of Expert CPG Commerce. We help brands reach more customers on Amazon and beyond. And today's guest is Russ Taylor from Secure CPG, which is an insurance brokerage firm, and by the name you can probably tell, specializes in the world of CPG. And Russ talks a lot about the value of using a niche provider that knows the industry like they do with CPG, because they know the things that he's going to talk about, like recalls and insurance around that, and protecting spoilage and contamination, and just things you don't really think about when you think about insurance. So again, lots of great value in today's episode. And if you're a brand and you're selling on Amazon, and maybe you're working with an agency now and you're plateauing, or you just have this feeling in the bottom of your stomach that you're just not doing everything that you could be on Amazon, we'd love to help you with that, right? And I get to sit here and tell you everything we can do for you, but we actually want to show you. So we provide a free audit at Expert CPG Commerce, where we essentially look at the presence of your Amazon page, but also the detailed analytics, your ad campaigns, the utilization of Amazon programs that are out there, because there's so much that brands could be doing on Amazon, but a lot of them just don't know, and their agencies don't know or don't tell them about it. So we'd love for you to go to expertcpg.com/audit, fill out some information, see if you qualify. And again, we could actually show you what we could do for you on Amazon, not just tell you. expertcpg.com/audit. All right, let's get on to the show with Russ Taylor from Secure CPG. Russ, thanks so much for being on. Appreciate it.
Hey, Ryan, thanks for having me.
Yeah, no, excited to talk to you today. Just explain to us first, I mean, who are you? And I guess, what is Secure CPG? How do you guys help brands?
Awesome. Yeah. So we are an independent insurance agency. What that really means is we have the ability to work in every state, and we work with over about 300 different insurance companies. And that allows us to go out and work on behalf of brands or companies that we work with and get the best available insurance products for them in the marketplace. So insurance agent, insurance broker, however people want to refer to us, but those are our capabilities, is that we work nationwide, and we work with a number of insurance companies that we refer to in the industry as carriers. And we go out and we can get multiple quotes, different products, different pricing, and we work on the brand's behalf to make sure that they have the best coverage at the best price. So that's really sort of the simplistic view of what an insurance agent does. How we operate a little bit more specifically is we have a focus on the CPG industry, particularly food, beverage, and beauty. And historically, insurance policies were written for vertically integrated manufacturing food and beverage. Think General Mills, think Nestle and Hershey's. And that is not how the modern brand operates. Most companies are outsourcing at least a piece, if not all, of their manufacturing, production, distribution, logistics. So we realized at Secure CPG, and really our thesis is that the traditional insurance policies for vertically integrated manufacturing are not adequate for the modern.
Yeah, love it. It makes sense. I mean, it totally makes sense, right? The whole product world has changed a lot in the last 20 years, right? And so, 15 to 10 years. And so, yeah, having the same things that people always used for the same things doesn't really work. So there's so many questions we could go from here. Like, I want to talk about different types of insurance, but let's maybe jump into that. Like, because I think people, especially a lot of founders and businesses, listen to this show, and everybody's probably familiar with insurance one way or the other. Obviously, we all have personal insurance in different areas of our lives, right? But I think a lot of us are probably familiar with, like, hey, I'm starting a business, I need to get like general liability. Can you just break down like the main, just in general for businesses, and then we can kind of go into more CPG related stuff?
For sure. I think that's a great place to start. So the things what I like to call the non-negotiables, right? To be on a store shelf, to have a manufacturer, a co-man, co-packer make your product, they're going to ask you for proof of insurance, which is that certificate. First item of distinction is certificate of insurance, a COI, is not insurance. It's just a piece of paper that says, hey, this is the insurance I have. A lot of times I have a conversation with someone, they go, oh, here's my insurance. I go, no, this is just a document that proves whether or not you have coverage. But the true non-negotiables are what's called general liability and product liability. When I talk about these, I refer to them as they're two sides of the same coin. General liability is for your operations. Product liability is for your product. And what they're covering is third-party bodily injury or property damage. So When a company has general liability or product liability, it's not protecting anything they own. It's not protecting their employees. It's protecting the company from getting sued in the event that someone else outside the company, again, a third party, incurs bodily injury or property damage. So in the CPG space, that's almost always bodily injury, right? There's not too much property damage occurring from a food and beverage product, hopefully. Yeah, so that's like the basis for all insurance that every brand needs to have. And that's what, when a manufacturer is asking for insurance, that's what they're looking for is, hey, we need to see that you have general liability and product liability. So happy to dive into that a little bit more, or I can sort of take the next step. What are you thinking, Ryan?
Yeah, no, take the next step. I mean, because I know we talked, those are the basics, right? And I think, yeah, a lot of people are familiar with those, right? So like, I guess what else does a brand kind of need, especially in the CPG world?
So these are the nice to haves is how I talk about them. And, as you get bigger, they become non-negotiable, right? You have to have them, but property insurance is huge. Very few people are insuring a building, but their inventory, their packaging, their raw materials, all of that stuff is very valuable. It's the lifeblood of the company, right? If you don't have a product to sell, how are you going to make money? So when we're looking at it, right, where that property is, right? Is it in your corporate headquarters? Is it at a warehouse in Ohio? Is it at a co-man in Colorado? You just need to be cognizant of that. And you want to make sure that when you enter into a relationship with your co-packer, your 3PL, your warehouse, your logistics company, that you have a good understanding whether or not they're covering it, or in most cases, you're going to be responsible for covering it. And that's probably the number one area where we see people just forget that's something they need to do, right? They're making the product, things are going great, they're selling it, and they don't even realize, hey, I have $100,000 worth of product sitting in a warehouse somewhere waiting to hit a retail shelf or being shipped D2C. If a flood occurs, a storm occurs and knocks down that warehouse, right? Are you going to get a check for all of that inventory you have that you paid to make, but now you can't sell because something bad happened to it? So
yeah, can we drill down on that for a second? So just like use an example, right? Because I think about that, and I think that's where a lot of the gray area comes in with insurance, right? Being like, let's use the value of your inventory, right? So if you're going to get, let's say, $100,000 of the product produced, right? That's your cost, $100,000 of your cost. So obviously the retail value and the profit is going to be higher than that. Where does that start and end? Like you've got it sitting, your co-packer makes it, it's finished, it's sitting in there, maybe waiting to get shipped out. Then you've got it in transit, on the trucks, and then you've got it going into your 3PL, and then you've got it going. We always think about Amazon picking it up and then going, now it's sitting, it's still your inventory, but it's now sitting in Amazon's warehouses. Like, where does the insurance responsibility fall? Is it always and I guess what happens if there is a lack of insurance, right? If you don't have insurance, like your co-packer, their insurance policy lapsed 3 months ago, they have no idea, and their place gets flooded or there's a fire, whatever it may be. How does that, can you kind of just give me some, I don't know, real world examples of like, how does that work?
Yeah, the easiest way to determine whether or not you, the brand, should be insuring it is, do you still own it? And that's typically how we advise people. There are some contracts that deviate from that, but the majority, I'd say 95% plus cases, it's, hey, do we own it while it's in this phase of the supply or distribution chain? And if so, you should have an insurance policy on it. Now, there's a lot of cool and insurance don't always go hand in hand, but there's a lot of cool techniques that the insurance, industry has sort of created. So there's things like inland marine policies, which sounds very counterintuitive, but it's while a product is being transported over the ground. You can cover it out of property policies while it's sitting in a warehouse, right? Or if Amazon picks it up, you can schedule the Amazon distribution center there. So there's any number of ways to do this. And really that's where having a conversation with your broker, your insurance agent, to make sure that they understand the life cycle of your product is going to be hugely beneficial, right? It's not rocket science. I don't want to paint this picture that it's hyper complicated to do this. It's really not, but it takes a conversation and it takes an insurance agent who's willing to sit there and go, okay, I understand this. I know which products to put in place for you. And the other thing that I'd say, and I don't want to pick on the 3PLs of the world or the distributors of the world, a lot of times when you're having a conversation with them, or you savvy brand owners might say, hey, do you guys have insurance? And they go, oh yeah, we have insurance. And that's true. They're not lying. They're not trying to pull it over to you. But our warehouse has insurance. Our business has insurance. But they may not realize that they don't insure your product while it's on their shelves. Mm-hmm. And that's not their fault. They're not insurance experts. So I think just be careful. And when you have those conversations, be pretty blunt and say, hey, do I need to have property insurance for my product while it's sitting on your racks? And if they don't know the answer, and they'll go back and they'll ask. And again, 9 times out of 10, you're going to be responsible for it.
You're exactly right. It's have that conversation with your broker, and not only initially, but also things change, right? Like it's like I switched co-packers, or hey, I limited my 3PL, and I gotta have Amazon fulfill stuff for us, and we're just rightfully go back to Amazon or whatever it may be, right? There could be a million things that change over time, which is going to obviously affect you either getting new coverage, dropping coverage, whatever it may be, right?
For sure.
That's probably another thing that. How often what do you recommend? When people revisit stuff, because it sounds like, and I guess we can delve into this too, either now or in a little bit, but because you kind of customize these policies, all these renew at once, or do they have different renewal periods? How does that work? Is it annual?
Yeah, so great question. Most policies, almost all policies, run on an annual term. Let's say you've got 5 different policies, right? One for property, one for general and product liability. You've got a recall, maybe you've got a directors and officers and an auto policy. And so you've got 5 different policies. And one starts in January, one starts in April, one starts in June, July, and then you've got an August in there. There's ways to say, hey, when we renew this, we're only going to have it run for 7 months. So it aligns with that January policy. So that's pretty easy to take care of. And a brand owner, just communicate that with your agent. Just say, hey, look, I'm really sick of paying my policies 5 times throughout the year. Can we just get these all in one day? They'll be able to help you. It is not a hugely complex thing. It'll take some signatures and some paperwork. The trickier part is, how often should I be updating my policies? How often should I be talking to my agent? And you and I both sell services to the CPG space. As much as we love our clients and they like us, I'm sure they don't want to spend every week on the phone with us.
Right.
So we usually recommend varying cadences based on needs and size. So companies that are looking to scale, right, going from 1 to 5 million, 5 to 10, 10 to 20, we realize that, hey, you're probably going to be bringing on a new co-packer. You're probably going to get a new vendor for ingredients or packaging materials. You're going to be entering into a new contract. Maybe you're going national with Whole Foods. Maybe you're getting into a KeHE or UNFI distribution relationship. So quarterly worked really well. We recommend a 30-minute deep dive quarterly, and let's get caught up on anything you forgot to shoot us over an email. Yeah. Most of the stuff is just, hey, we brought in a new employee. Hey, we got a new auto. We're doing this, that, and the other. We need a certificate of insurance. That's all stuff that can be adjusted in 24 or 48 hours. Quarterly really works well. It's enough that the ball doesn't get dropped, but not so frequently that you feel like you're wasting time or spending all of your time adjusting insurance policies. Because on the back end, we're adjusting a lot of moving parts. We're dealing with endorsements, and we don't want you to see that anyways, right? It should be fairly seamless. Yeah. We should be able to handle all that, and then you can give us the highlights every 90 or 120 days. And most of the companies that we work with that we have on that schedule, we really appreciate it. It can be as in-depth as something that you and I are doing right now. Some brands want us to check in via email, and if they have something big, they'll schedule a call. But every 90 days seems to work pretty well for brands, and that's what we recommend.
All right, let's go back to, I know we're talking about the nice to haves, and I took you down a little rabbit hole there, but I think it was good for the conversation to kind of go that way. So let's go back to those nice to haves, some of the other insurance that you kind of see for really beneficial for brands.
Absolutely. So the big one that everyone in the space is aware of, and we recommend it, but it's a tough pill to swallow because it's usually the most expensive line item, is recall insurance. And I usually preface the conversation around recall. As a business owner, there are some inherent risks. You're doing something risky by starting your own business, and that's awesome. And we want to protect you to the best of our ability, but we also want to be cognizant of cash flow, right? I can insure you until you're not profitable, but that's not really the point. So recall is something that is just such a beneficial coverage, right? It protects against the potential harm happening to someone, and it allows for the removal of product from the supply chain or from the marketplace. And there's a lot of things it covers. So it covers removal, withdrawal of product, destruction of product, which a number of people forget about. It covers PR costs if you need to get a statement out to the public. It can cover legal fees. It can cover loss of revenue while the recall is being initiated. It can cover product extortion, which would be somebody takes a hold and finds out that there's something wrong with the product. Hey, we're gonna blab this to the media if you don't pay us a bunch of money. Because it has all those awesome add-ons, though, it usually gets expensive quick. So when we look at brands that need this, in theory, every brand needs this, but there is a little bit of a, hey, are you the size, scale, scope, and can you afford to get this policy? Because they can get expensive quick, right? $100,000 in coverage for a small brand is going to be, north of $1,000. Yeah. So you're talking 1% of top line revenue. And that's for one line item. So we always advise there's ways to get around that. We can build coverage into the general liability policy in, I call it product recall light. It's called product withdrawal expense. And that's a really great option for emerging brands to look into. It'll cover to the cost of withdrawal of the marketplace, but it doesn't have all the other bells and whistles. It's way more affordable. It's a really nice stepping stone to say, hey, look, I can sleep better at night because of this. But I love talking about product recall. It's something that we advise every brand on. And there's so much that goes into the product recall. And for the companies listening, the number one tip I have for them before they buy their product recall policy is sit down and think about what would happen if all of a sudden you had to pull 10, 15, 20, 25% of your inventory off the shelves. First, who's going to be in charge of that? Second, what's the cost of the inventory? What would it cost roughly to dispose of it? How much are legal fees going to be in your estimation? And it's not a perfect science, but hopefully you can come up with a ballpark figure and say, okay, great. Now I can back into how do I go talk to my insurance agent and talk about recall more efficiently.
I guess in terms of recall, I know all types of insurance like that. And I wonder how much this plays in a recall. How much of it is like the size and or the category of the brand that you're dealing with, right? Because I'm sure some categories are more considered riskier than others in terms of other costs. So like, talk to me about that, either from, I guess, product recall or just in general.
Yeah. Now we're getting into a little bit more of the nitty gritty of insurance. And this is cool because I think brand owners are unaware of how insurance works on the policy level. And that's not their fault, right? Insurance is unnecessarily opaque. I mean, I'm trying to provide a little bit of clarity talking to you today and in the companies I work with. So apologies in advance to all the seafood, meat, egg, dairy, cheese companies out there, because this is the part you guys don't like to hear about. So everyone should be in sparkling water or granola, right? That's pretty benign risk.
That's easy.
Insurance companies, Hartford, Travelers, Chubb, they love granola. They love sparkling water. It's really easy for them to wrap their head. Frozen foods and dairy products and things that can carry E. coli and listeria and all the bad stuff. You get dinged every day that you have an insurance policy. So I'll touch on general liability, product liability, and recall because they're rated very similarly. So when you're looking at your insurance policy, particularly the general liability and again, the recall, the main driving factor is how much you sell, top line revenue. And that's how they approximate risk in the marketplace. So you're doing $1 million in sales versus $10 million in sales. Obviously, you're going to pay more if you have $10 million. I think everyone's aware of that. But basically, they take that number, divide it by 1,000, and then they multiply it by a rate that the insurance company has created. So Chubb has one rate for granola. Hartford has another rate for granola. Travelers has an entirely different rate for granola. They all have their own internal metrics that they use. But at the heart of it, you can go to your insurance policy and say, okay, I'm doing $1 million in sales, divide that by 1,000 times, okay, here's my rate, $1.76, and that'll spit out the premium on that you're paying. Then there's discounts and all sorts of other things that are added on, but that is how you get to your base premium. Same factor with recall, right? It's top line revenue is the approximation of the exposure times a rate that they have calculated. And this is where we get into, hey, if granola is $1.76, ground beef might be $5 or $7, right? And I'm making these numbers up. So
hey, I gotcha.
It can vary pretty widely. And that's why it's really important to, in my opinion, to, hey, just understand what your product is, be aware of it, know that, hey, am I getting an okay deal? Is my rate staying the same? A lot of times you'll see a company grow and their premium will go up. And they go, well, you went from $1 million in sales to $5 million in sales. Okay, great. My premium went up. All right. But did your rate go down? Did you get a better effective rate? And that's an easier way to track. And so I talk to people all the time, like, let's look at what we are net of on the premium and top line revenue, because if we're getting a better rate, then you're getting a better deal.
Yeah, that makes sense. It's a good way to look at it too. The rate, like, I mean, everybody looks at that bill, but like it's, and what's behind the bill, what are the numbers? It's all based on size, category. That all makes sense. Let's talk about like retailer specific, right? Like, I mean, because I know obviously if a retailer's carrying your, whether it be obviously like a brick and mortar, a grocery chain, even Amazon, right? Everyone wants to make sure that you're covered and, you know, that you have your ducks in a row. So are retailers for the most part pretty similar, or are there some that are have a kind of you must have product recall, or these certain line items within your insurance, or even for this retailer you have this special kind of insurance, or things like that?
Yeah, no, you hit the nail on the head. One of the biggest surprises for brands encounters when they go, oh my gosh, Russ, this is amazing. We're going national with Whole Foods, or Walmart wants to let us in, or Costco. Oh my gosh, this is amazing. We want to get into club stores. And then the requirements come back and they go, hey, you need to carry a $10 million limit of liability. Hey, we need you to have product recall, whatever that might be. And they come back to us and go, great, here you go. Here's the requirements. I go, guys, this is going to 2x or 3x your insurance bill. And so almost always the juice is worth the squeeze. I want to preface that. But yeah, I think a lot of times brands come back and they forget that the onboarding cost of getting into one of the big retailers, Amazon in conjunction has some stringent insurance requirements depending on your product category and how you're selling them there. But I'd say for the most part, you're looking at when you get into a regional retailer, they're going to require a $5 million limit of liability. So that's pretty normal. That's what we see. Depending on your product category, if you're in the nutraceutical space, they're going to require more. But that's pretty normal, is $5 million. I believe Costco and Walmart are $10 million. I haven't looked at one of their contracts in a couple of months, but that's what it was last time I looked at it. And getting that come back into when they're asking for that $10 million or $5 million, that's what's called an umbrella or an excess policy, and it goes over top of your general and product liability. So it's taking that typically what's a $1 million policy with your general liability, and they're saying, hey, we need you to be at $5 million. So you have to go out and get a $4 million umbrella. 4 plus 1 brings you to 5. And then they say, great, we're happy to let you put you on store shelves now. And we do see some retailers and some online marketplaces require product recall. We see some of them require various types of inventory insurance. So it's really important to get that contract, look over it, send the liability section to your insurance agent. You're probably having your attorney review it anyways, so just copy us on there, right? We don't mind. We'll read the document too. We're not attorneys, but we'll look at the liability section and say, hey, this looks pretty normal, or hey, they might be trying to pull one over on you. Yeah. And the last thing I want to mention on the contract, and Ryan, you bring up a good point. These contracts with the retailers and online retailers online marketplaces, they're usually pretty boilerplate, right? They're usually sending them out to hundreds, if not thousands of companies a week or a month. They're really not super dialed in on the $4 million power bar company that they're thinking about bringing onto shelves or letting sell through their online marketplace. So we've had a lot of success advising brands. Hey, talk to the person and say, hey, look, we're a small company. We'd prefer to keep our existing limits of liability. We're happy to name you as an additional insured. And the worst thing they can say is, no, you have to meet our contract requirements. Okay, great. But we've seen in a number of cases where someone's asking for a $10 million limit. One of the company we work with goes back and says, hey, we're a really small company. We only do $750,000 in sales or $1 million in sales. we're small compared to everyone else that you have on the shops. We think our $2 million of coverage is adequate. And they may say yes, and then off to the races.
Yeah, that's a great tip. I mean, I think a lot of people forget about that, right? Like I've heard it called the Aladdin principle. If you don't ask, right, there's no usually any harm in asking. So you're not going to know what you're going to get. And that's a great call out. And you talked about the different, I guess, retailers too. Do you always see, are there any like weird ones? I guess are there really strange ones that you see, or like what? That's a unique policy requirement, or is it like a retailer plus a category?
Yeah, not that we've seen, right?
Okay.
And here's my like tooting the horn for the insurance industry. These big box stores and online retailers like Amazon and Walmart and all those places, they're really big. They do a great job what they do. They have really fancy and powerful attorneys, but they really don't know insurance, right? And just like they don't know the brand's product. I try and remind the customer, like, hey, you're the specialist in the cereal box that you make, or you're the specialist in the jerky bar that you make, right? Like, they can't tell you what exactly your product is, like, know that better than anybody. And so a lot of times we see requirements come through and we go, that's not how insurance works. So definitely talk it over with your agent. And again, feel free to ask them questions or say like, hey, look, we think this is adequate and this is why. But we don't often see like strange requests, right? Because they're all trying to be the same. Their attorneys are trying to keep it as buttoned up as possible. But occasionally we have a small brand get a really great opportunity with somebody big, and they are just floored when they come back with the requirements that the retailer is asking for. And we go, yeah, hey, this is what happens when you go from single or double A to the show.
Yeah. Everything gets a little more serious, right? And I mean, it's you kind of called out perfectly earlier. It's like everybody's excited to get that PO from Costco, from Target, from whoever it is, right? Like everybody's super excited to do that, but then it's like, hey, now here's everything you got to do and you got to perform it. I think one of the most famous is Walmart, right? Like, I mean, their requirements are so, and not just in general, right? Like of getting time to the DCs and everything like that. You got to be ready for all of that, right? And be ready. There's a episode we recorded a while ago, and they were in Walmart, and they weren't able to meet the demands of all the Walmart. They just grew too fast. And so it's the flip side of that, right? That's the inverse of it, is when you can't handle it and it's hard. So yeah, this is a good wake up call, I guess, right?
Yeah, no, you're 100% correct. And we're always ecstatic when we see or we're friends with a brand that gets their shot, right? And yeah, I think everyone wants it, and when they get it, they should take it. But I usually refer to this as, because again, insurance doesn't always make sense. It's not communicated clearly in a lot of cases. And we always say, hey, look, we'll try and give you the roadmap. We'll try and paint the picture for you so that you know what's coming. Because there's going to be things that pop up. There's going to be instances that you want to have coverage for. And if you know what to expect, it makes the pinch a little bit less painful, hopefully.
Yeah. All right, let's go back to those other nice to have. So we've talked about recall. It's a huge one, obviously. Anything else that comes to mind?
Yeah, something that's probably near and dear to your heart is cyber insurance.
There it is.
And it was one of the worst performing lines for a long time. Companies have gotten better about shoring up email security, shoring up, having MFA on things, having callback on wire instructions. But the number one thing we still see involving online claims is falsified PO or falsified invoice. So that is, you're emailing with a client or a vendor or a supplier, whomever it is, and you're rifling back POs to and from each other, and one gets intercepted by a bad person, right, with malicious intent. They change the wiring instructions, or they say, hey, we've got something going on here. As an emerging brand owner, right, you've got 73 other things to do than worrying about bill pay. And so you log on real quick, boom, fired off, send that $6,000 wire away. 2 weeks later, that supplier calls you, he's like, hey man, we're friends. Like, I haven't gotten my check. I'm just worried. What's going on? No, I sent that. And you send them the email, you go, that's not us, man. So,
oh, geez.
Yeah. And it happens a ton. It's really stinks when it happens. And $6,000 is a lot of money for a lot of businesses out there.
Yeah.
And so it can be really frustrating. And for how affordable cyber insurance is, we're telling people, look, I understand you may not want it right now, but this is something for several $100s in a lot of cases. You can get $50,000 or $100,000 worth of coverage, which is going to cover realistically any invoice that an emerging brand is working on. And the same goes the other way, where you're expecting payment from someone, they get infiltrated, and you don't get paid, right? And then they say, hey, look, we don't have the money to pay you now, unfortunately. Your policy could reimburse you. Policy could also reimburse a third party that feels wrong by you. So it works. Cyber is great because it works in both ways. And again, it's become such a affordable coverage in terms of what it provides. And I think everyone thinks cyber is this. There's some dude in a hoodie in a dark room that's sitting there cracking into their website or their email account. And it's usually just user error, right?
Yeah.
Clicking on a phishing attempt.
Yeah, no, you're right. I mean, I go back to, it's both. So it used to be, I hear a lot more of that. We had a client years ago where their company's hacked into, and these cyber guys held their company hostage, hold their entire, I think it was an entire QuickBooks file hostage, and wouldn't release it to them without payment. But then same thing, we get them, even for us, I'll get an email when a employee needs to change their direct deposit, a routing number, an account number, and someone from my team. Yeah, right. And it's okay, obviously they're not going to email me. First of all, I don't really do much with payroll on our team, but our director of operations handles most of that. But it's why would they just email? So I know, obviously, it's man, you're right. People just catch them on the wrong day, or just the right email, and it's easy to get caught up in that.
I was just saying, for anyone that's gone through that, do not feel embarrassed, do not feel bad. And we, as an insurance agent, right, one of the largest insurance companies in the United States got hacked through a phishing email attempt. So they really have nothing to shake a stick at. And then we get tested all the time. And it's really funny. One time, the guy in the office next to me was leaving the office, gets an email from the CEO saying, hey, could you go get me a bunch of gift cards from Royal Farms? And so he walks back into the CEO's office, he's like, why do you need gift cards to Royal Farms? Is a regional gas station convenience store chain here on the East Coast. And he's like, why, John, why do you need, $150 in Royal Farms gift cards? And John's like, I have no clue what you're talking about. And they go through it, and sure enough, phishing attempt. And it was hilarious that we just happened to be talking about cyber earlier that day. But it happens all the time.
Yeah, no, it does. Any other, types of insurance that the brands should really watch out for? Or, those other kind of nice to haves, or they don't really think about?
So something that we see it is omitted almost all the time, or it's in a limit that really won't even do anything in terms of helping. On the property policy is two sublimited coverages called spoilage and contamination. And they're pretty easy. I think every brand out there that has a product that can go bad thinks about spoilage, thinks about contamination.
Yeah.
And they're added to the property policy. They can be added in fairly significant amounts for not that much money. And if there's one takeaway people get from this, it's, hey, call your agent. You can probably add a lot of these for literal pennies on the dollar. I think pretty standard amount for us for an emerging brand. We sort of qualify under $5 million. We could have $50,000 to $100,000 worth of limit for a few $100 to $1,000-ish. And that $50,000 worth of spoilage goes a long way, right? And we don't talk to a ton of companies that are doing runs much larger than $50,000 regular. And if they are, hopefully it's in batches and you have some, quality control in place, but pretty easy to add on. They can be added on to the property policy or a BOP policy, which a lot of brands listening to this are going to have, which is a business owner's policy, in meaningful amounts. Like I said, $25, $50, and $100,000 for a few $100s. So I don't want people to sit here thinking oh my gosh, my insurance premiums are going to triple if I do all of these updates. We're usually looking at increasing by amounts that people can say, oh, I've got that in my bank account, and if this would actually help. But the number of times we've heard about an ice cream company's product being left on the loading dock in Scottsdale in June.
That's the big one, right?
It's oh man, 3 pallets got left on the loading dock, and it was 95 degrees, and then we have ice cream soup.
Yeah, those are the ones that comical to hear about, but obviously it happens, right? And it's all insurance is peace of mind, right? So that's what it is. I mean, you just want to have that, knowing that. So explain to me how you guys build. You said you kind of build things out like a menu, right? So as a broker, you're able to kind of pick and choose based on the category, the size, and what your knowledge of these carriers are, right?
Yeah. We know the players in the space that want to write policies for food and beverage companies. It's not a lot right now, right? There have been some larger recalls. There have been some illnesses that have happened. And so some insurance companies have paid out. I think there was a $25 million loss 2 years ago. I think there was a $35 million loss 3 years ago. Oh. And insurance companies are big. That's not going to bankrupt them. Please don't lose sleep for them. They don't want to pay out those premiums, and the companies don't want to go through. The insureds don't want to go through that. So when we look at it, we know the players were constantly talking to underwriters about what kind of businesses they want to see, what kind of products they want to underwrite. And then we're working with them, and we do this so often. We work with over 250 companies in the CPG ecosystem. They know what we expect when we send them a submission for insurance. We taught them 2.5 years ago when we formed the company, but we look at it a lot. Hey, we have a very particular way that we like to see the property scheduled. We have a very particular way that we like to see spoilage and contamination added. We invented a new version of recall. That's an endorsement to recall policies. That's CPG focused. And then we talk a lot about other coverages that we see, and we haven't touched on this yet, and we can get to it. When you bring on outside investors, what's expected from a directors and officers perspective. So we do a lot of research on, does Hartford have the best rates right now for this category of food or this beverage style of product? And that way, when we talk to companies, we can advise them correctly.
Yeah. Can you briefly touch on bringing outside? I mean, that's definitely been a big thing in the CPG world in the last 5-10 years is outside investment. And while it's maybe dried up recently, it's still out there. So what are the requirements? I mean, I guess investors are going to want to make sure they're protected as well. So talk to me about that.
Yeah, they're usually the ones that are driving brands to get more insurance. And they're going, hey, we're going to sit on your board. We've taken a stake in the company. We want to see it succeed. So the first thing they're going to say that almost every investor has a side letter requirement, what's called directors and officers coverage. And that is anyone who sits on the board, it protects the policy steps in place if the board member or the company were to get sued, and it protects their personal assets. So that policy acts like a shield in front of them, in front of their personal assets. So that's why they're asking for it. And it's totally normal. I sit on a couple boards, and every board that I've ever sat on has a requirement of directors and officers insurance. So it's a level of comfort for someone like myself or yourself or investors who are taking a position and sitting on the board of a company, and it does its job, right? It protects their personal assets. So that is one of those things on the roadmap that we tell brands, hey, you're talking to XYZ venture cap firm, or you're talking to an angel investor. They're probably going to tell you, hey, I want to see $1 million in directors and officers coverage.
This has been super enlightening. Obviously, all the things you give me, I get to drill on so many more topics, but for the sake of time, anything else that brands like really need to know? So like things that you see that you're just like, you wish you could have told somebody 6 months ago, or they would have heard 6 months ago from somebody. Like, what are the couple or one or two things that the brands really need to know?
No, it's a great question. I'm trying to think because we're distilling down a lot of information here. Which is great, right? My goal is to make insurance bite-sized, right? I want people to be able to understand it. I'd say one of the things, and this is great, this will probably be my first piece of advice that doesn't cost money, but ask your insurance agent questions, right? Don't be afraid of them. And if I can advise the companies on here, when you get an insurance agent, right, their job doesn't end when they place the policy, right? Those quarterly meetings we talked about, that should be happening, right? That it's not just, here's your policy, I'll see you at renewal next year. That's not really offering actual assistance. And then outside of that, I'd say make sure, particularly if you have an interesting product, right? If you have an ingredient that's not normal, I know Ayurvedic is becoming a big thing, and then ashwagandha in a lot of the teas and beverages coming out, those can be excluded on your product liability policy. So get a copy of your product liability policy, or ask your agent to read through it when they get your quotes, and just make sure that there's no exclusions that are going to not protect your brand. And I'll give you a perfect example. Prior to working in food and beverage, I did a lot in the defense space. So I did aerospace, and I had a client that came to me. They were a friend, and they had gotten a policy online for the drones they manufacture. And they were really excited because it was the most affordable policy they had. This is great. I'm super happy for you. Let me read through it just to make sure there's nothing crazy. And the policy with the insurance company was called droneflightinsurance.com or whatever. And so it sounds great, right? It's like they make drones, drone flight insurance, whatever.
Yeah.
And you read through, and the second exclusion is anything that flies. And we've seen a couple of those where it's like, hey, we start talking to a company, they send us their product liability policy, and it goes, hey, don't you guys make a jerky style product? And you go, oh yeah. And I go, well, there's ground beef exclusion on here or whatever. And we go, maybe you're willing to roll the dice and say that they'll deem jerky not ground beef, but just ask your agent to read through it and make sure there's no exclusions that are going to pop up and hurt you and get a claim denied.
Yeah. Well, my takeaways of just this conversation is like, man, you really need to get an expert like Russ here. Like, you need to be able to, like, someone who's in the industry who knows it, because insurance is so broad. Every business needs it. I think a lot of us fall into the trap, I know I have in the past, of like, hey, I'm just going to go to this broker who I know is a friend of mine, may not specialize in the industry. And that's, fine. But like, I don't know. In something like this, you really want to find someone that knows the industry. I mean, it doesn't cost you anything extra, because obviously using a broker. So I think that'd be my big advice is people's like, I'll find Russ here and talk to him about your insurance. So with that being said, Russ, great segue. Like, how can people find you, get in touch with you?
Oh, amazing. Thank you. Yeah. So our website's securecpg.com. My email is Russ, R-U-S, at securecpg.com. And we're launching a bunch of new products. Always happy to have a conversation and help people understand, because it's not fair when, in my opinion, when somebody's buying something every year and they're not sure how it works. So if you have questions, I'm happy to help you and hopefully help you make the right decision.
Awesome. Well, great conversation. Really appreciate you coming on today and sharing all this value with our audience.
Thanks so much for having me on, Ryan.
What a great episode today with Russ Taylor from Secure CPG. Please look him up, talk to him about insurance. I guarantee you that if you just have insurance to like a typical provider, there's probably things that are missing, and he'd be a great guy to chat with and see if he can find some better solutions, maybe even a better price or comparable price for you. So, you just want to be covered, right? As you grow your brand or your company, and want to have that insurance kind of grow along with you, as he discussed. So thanks again to Russ for coming on. And hopefully you got a lot of value for this episode. The biggest thing, I know you hear it in every single episode you listen to and you watch from any podcast, YouTube video, but it does help us. Please like, subscribe, rate us, review us. Just take a second. It really helps us out, helps us reach more listeners, and or pass this episode along to a friend. Send them a link. We'd love to have them become a listener as well. And we will see you next time on the next episode of the Expert CPG Commerce podcast.